Tesla is a cheap stock if this happens. Guys, we're gonna get into it in this video. I know there's a lot of Tesla bulls and bears. I just released a video talking about Tesla and the extreme predictions that a lot of people have for the company. So Tesla has been crashing like crazy, over 60% in just a few months, with a lot of speculation on why it's happening. We have the speculation of Elon not focusing on Tesla because he has Twitter. That's one of the big things that people talk about. The deliveries that just happened, how it missed deliveries by like 30,000 plus cars. We have people thinking about how Elon's screwing up the brand because he is becoming more political, so that's crashing the stock. We have Elon selling a bunch of shares in the company like crazy. When is that gonna end? He said it already ended, but who knows as the stock continues to crash and crash and crash. But with all of that being said, people who own Tesla still have high expectations for the stock. And does the price show that? Please like this video and subscribe to my channel. I'm always providing you guys with so much new content. With all that being said, a lot of people still think the stock is overvalued, or some people even think it's very, very undervalued at this point. We're gonna get into the numbers a little bit. We're gonna talk about the big picture because I think the big picture is what's gonna make this investment successful if you really believe in Tesla, the stock. So let's get into it. So the past year, Tesla stock has crashed 71%, which is really crazy. No one would have called that. No one would have said that if you told a Tesla bull. Would it crash 71% in a year? No way, no way people would think that. A lot of people already thought it was a bubble stock, but still, people were like, damn, like even if it's a bubble stock, they didn't think it was gonna crash this fast. But I gotta give my props to Tesla because even with all of that being said, Tesla stock has still compounded 39% over 12 years. Guys, if you were in the stock, you were so lucky. It made a killing for you. So congratulations to all the Tesla people. And Tesla revenue is just going crazy. 82%, 14%, 28%, 70%. People who are predicting the future of Tesla are looking back and seeing all that crazy revenue growth and all the expansion of Tesla factories and saying, yeah, this is gonna happen into the future. And I think that might be the mistake that people are making because back then, Tesla didn't have a lot of competition and the economic times were easy for Tesla as interest rates were low. You can borrow at low amounts because most people that are buying a Tesla, let's be honest, are borrowing money because it's more of a premium car. So you have to kind of look at that and understand that just because the past was amazing for Tesla doesn't mean the future is going to be. 26% gross margins is insane. Operating margins at 16%. So I can kind of see why, yes, Tesla is a strong company and has strong fundamentals. We even have annual deliveries at insane growth. 70% in 2013, 2014, 40, 50, 50, 32, 142, 49, 36, 87, 39% growth for Tesla, which is pretty much insane for the growth of Tesla cars. So people are understanding that this company still has a long runway, and I would agree with that. But are the expectations too high for Tesla going forward? And we gotta dig into that because that's the main argument that people have to understand. Because you're not paying a crazy price for Tesla right now. I truly believe that $110 for Tesla is not insane with a PE of 34. If you were expecting a 20% growth on the bottom line, earnings, if you're expecting a 20% growth for the next 5 to 10 years of Tesla, Tesla is an amazing buy at this price. But that's the major if. Do you truly believe that Tesla can handle that going forward? Because they have a lot of headwinds on Tesla right now. First headwind we got is the brand of Tesla. What is the mode of Tesla? Is it the brand name with Elon right beside it? Because if that's the mode, Elon is kind of killing the brand. Think about it. People were saying Elon was the best and he was the best innovator. He was doing all the good. But you can kind of see that shifting, especially with the Twitter purchase and all the political people coming after him. He's being more on the conservative side, if you can kind of tell. A lot of liberals are buying EVs, so he's kind of doing the opposite. So is that hurting the brand? Does he have some kind of switching mode? So if you buy a Tesla, would you never buy another car? Because it's just so amazing and it's just hard to switch over to another car because you bought that car? I doubt it. Is it at a low price? No. So the moat is really in question when it comes to Tesla because if you think it's brand and it's all about brand, the new shiny car is not there for Tesla anymore. It's not the new thing on the block. A lot of cars are coming to market, so that's hurting it. The Chinese market, I always hear people talking about the Chinese market, But guys, the Chinese market doesn't have a premium. It's hard to sell cars at a premium in China. So you're gonna have to lower prices because BYD is coming, NIO's coming. Like a lot of these car companies that are selling EVs are coming for Teslas. And if they're selling at a lower price, man, the Chinese market is very price conscious, so you got to be careful in that market. So China might not be this huge bull that everyone thinks it is. So you might have to suffer a little bit on gross margins and operating margins. Elon has to sell at a cheaper price, and he's been selling cars at a cheaper price. So you can see next quarter, and next quarter is going to show you a lot. Are the gross margins going to go down? Are the operating margins going to go down? Because he's been selling at a cheaper price to kind of meet deliveries. That's going to be a huge issue on earnings and net income going forward. You see how there's a lot of things coming at Tesla, and people are talking about all the other things that Tesla is doing, like the solar, like the charging stations. Like, guys, stop thinking about that. Their main focus and their main drive for profitability right now is cars. So we gotta focus on cars, not some pipe dreams. And that's the issue with a lot of Tesla shareholders. They have a lot of these crazy predictions and everything like that. But guys, you have to realize that it's not there now. So stop putting that into the evaluation. It's not there now. You don't know what it is. You're just lying to yourselves if you believe that these projections are going to go crazy because you have no idea. So you can't make these projections with no solid information. The Cybertruck's coming to market. So how is that going to affect Tesla? We have interest rates going up. That is a huge, huge red flag for Tesla. Because Elon Musk is complaining about interest rates. And why do you think he's complaining about that? Because he understands that the interest rate is going to have a huge effect on demand. If interest rates are this high, how many lower tier customers are going to buy Teslas? Because Teslas are a premium product. Like the lowest is probably like $45,000 for a Tesla. Having to borrow at high 5, 6, 7% interest rates. The banks are not loaning as fast as they were for cars anymore. They're being very strict on that. So man, if you're hoping for lower interest rates into 2023, 2024, 2025, that's a bad hope. We don't know what's going to happen. So if you're going to hope for that, for Tesla to be a good company, then that is just out of the blue. That is just a false hope to have. Assuming a 20% growth, you sell it at a 20 PE and you want a 15% return, a fair price today is $100. So I think that's a good price to pay if you're expecting a 20% bottom line growth of earnings. With all the headwinds I mentioned for Tesla, they're selling Teslas at a cheaper price, the interest rates are going up, the gross margins and operating margins might go down next quarter, the next year. The brand might be under fire because of Elon's actions and what he's doing on Twitter. So guys, you gotta look at all of those things and see if you can predict out into the future that this company is gonna grow 20% plus in the next 10 years. So if you can predict that with some confidence, it's a buy at this price. If you don't know that, and if you can't predict that, then I say it's just a leave for now. And in my opinion, I can't predict that right now because the economic times are going to be hard for Tesla because it is a car company. At the end of the day, it has to sell cars. So guys, what do you think about this video? Like it and subscribe to this channel.